Hello everyone, hope you guys are doing great today. So in my today's video, I'm going to break down the Q4 FY26 results for both ICICI AMC and HDFC AMC. So these are the two, India's two largest asset management company. We'll compare their asset under management, profitability, growth, and what are the strategies that they're approaching. And obviously, at the end, I'll answer the question according to me, what is better for the future. So let's get into it. And before we compare all these things, I'll just go through their Q4 FY26 numbers. So let's just get into it. So if you look at the for ICICI AMC, right, the revenue grew up by almost 20% YOY to 1,517 crores from 1,269 crore last year, and PAT is up by almost 20% to 763 crores from 692 crores. But in terms of EPS, we cannot compare it because last year when the results were declared, they were a private company, but now they are a listed company. So the numbers of shares have by default increased. So if you look at the pure number, it doesn't look good because it shows that the EPS is down by 96% to from 391 rupees to 15.45 rupees. So it's definitely not a great comparison. I think we have to wait for the coming quarters, or since the company got listed in December, so the next year December would be a much better number to compare. If you look for HDFC AMC, their revenue grew up by almost 17% to 1,050 crores from 901 crores. But PAT was down by almost 2% to 623 crores from 639 crores. And EPS was down by almost 3% to 14.55 rupees to from 14.94 rupees. It was just slightly because of the extra expense and certain changes in the mark to mark of the securities that this has happened. But otherwise, the rest all look good. Okay, so as we compare these numbers and we compare these two industries, let's look at the overall mutual fund industry, what is actually happening, right? So the mutual fund industry in India is growing by almost 20% YOY. It is because most of the people in India are moving from, from their FDs or basic savings, they are moving into investments. And obviously, most of the people cannot spend that extra time, their individual effort. So they prefer to, give the money to the mutual fund. So so this growth is driven by SIP flows and retail participation. And at the back of this, both HDFC AMC as well as ICICI AMC are getting a huge tailwind. And if you look at the scale, right, ICICI AMC has around 11 trillion in assets. Obviously, the numbers which I'm telling you are in rupees, not in dollars. So please don't confuse that. And in terms of HDFC AMC, they have a overall asset under management around 9.3 trillion rupees. So obviously, if we look in just terms of pure numbers, ICICI is bigger than HDFC AMC. And if you look at the market share, right, currently ICICI has a market share of around 13.5% and HDFC is around between 11 to 13%. If you look purely in terms of the scale, right, definitely ICICI is winning. But let's look at the other important number, which is profitability. So ICICI reported a profit of around 3,300 crores for the whole year of FY26, where HDFC AMC reported around 2,850 crores. So again, if we look at the in terms of absolute number, ICICI is again doing well compared to AFG. But let's look at the interesting part in the overall number, right? Because sometimes just looking at the number does not give us the whole picture. We have to go into detail because in terms of overall number, ICICI is growing, but HDFC is known for its, how to say, consistent margin and efficiency. So they never have a problem and they always maintain high margins for their number. And in terms of growth, right, which is the most important thing for personally when I look for, investing in any companies or in any stocks, right? If you look at the overall growth, I for ICICI the revenue grew by almost 20% YOY, and the profit also grew by around 24%, which clearly shows a strong growth. But if you look at HDFC AMC, right, so they grew at a slightly slower pace. So in terms of the overall number, if you look, right, ICICI is pushing for more growth and gaining the market share. And let's look into their strategy difference, right? And this is one of the most important thing because they both are in the same field or in the same industry, but the way they are looking at things are quite different. Because let's start with HDFC AMC. So they are mostly, how to say, focused on equity oriented mutual funds, and almost 65% of their AUM is in equity, which means they have higher margin, strong SIP inflow, and long term retail investors. So in that way, they have a good base and nothing changes. But if you look at ICICI AMC, right, they are trying to diversify their overall asset management business. So they have equity, they have debt, they have hybrid funds, and they have also PMS and alternative investments funds also. So, and if we look from the hybrid fund, right, ICICI AMC currently dominates equity hybrid funds with over 20% market share. So if we compare both ICICI AMC and HDFC AMC, right, they are completely playing two different games. HDFC AMC is completely playing the equity part, but ICICI is trying to diversify from equity to debt to hybrid funds to alternatives like AIFs and PMS. So, in simple term, if I put it right, HDFC is like focus and discipline in what they are doing. ICICI wants to diversify their overall business. And if you look at the future growth, right, where it will come from, if you look from ICICI AMC perspective, they are aggressively expanding into gift city, alternative investments, and long-term and structured products. So this gives them the visibility of high growth and high margin business in the future. So obviously, this is the visibility. Whether they'll be able to do it or not, we have to look in the forward. And if you look at HDFC AMC on the other hand, they are mainly focusing on digital platform, retail expansion, ESG, and long-term investing. So, in short, ICICI is going aggressive where HDFC is trying to do best what they do in their business. So, if you personally ask me, right, what is my verdict on this, right? So, I think it all depends what the investor is looking for, whether they are looking for a stable company where nothing much is changing and the future is much more stable, or are they looking for something, company which is growing at a higher rate. If you personally ask me, I would go for a higher growth rate because that's where the premium comes from, right? So in this case, ICI is growing at a much higher rate and they're gaining market share, and that's what they're doing well. So I think in the end, hopefully you understand the difference between the results, what are they doing, and how they are approaching the market. And if you do like this video, please do like and subscribe. Thank you, and God bless you.